Good morning everybody, so it is the 26th of February and today we're going to be talking about mitigation blocks, and we're going to cover absolutely everything there is to know about mitigation blocks, so that when you leave this video you can go into your charts, trade them, know how to spot them, know how to execute on them and become a beast in the trading field, right? So a lot of people get confused between mitigation blocks and breaker blocks, and so if you haven't seen my video on breaker blocks, I will put a put a card up here in the top right hand corner and you can watch that afterwards. I'll also put a snapshot of it at the end so you guys can view it there. If you're new to the channel, welcome. Please do consider smashing the like and subscribe. It helps the channel out and it also helps other traders like yourself view this content, right? So I'd be greatly appreciated if you could do that. And also, just to let you know, I do have a Discord, so if you guys want to join it, it's still currently open and still currently free. So check my socials and the links are in there. So without further ado, let's jump straight into it. So you all know what a mitigation block is, or what it looks like, right? But you want to know how to trade it. So it's a mitigation block, and we're going to go into it in detail in a second in charts. We're going to go into detail with examples. We're going to break this puppy down, right? But first, we've got to do the boring stuff, right? We've got to do the boring stuff. So we have to check and we have to do the bullet points, right? So let's get the bullet points out of the way, and it will help frame why a mitigation is a mitigation block and why we are taking them as entries. So what we need to know is that they take place at anticipated levels of resistance if bearish, or support when bullish, right? So they happen at major swing highs and major swing lows, right? That is when you are likely to get the best results. And I will break this down in more detail shortly as to why this is important, but just bear with me. So bearish. Buyers when long will need to mitigate their losses when price retraces to this level, right? So if a buyer has gone long when prices come back and has retested that level, which quote unquote retail believe is support, right? And it's broken through. When it retraces up into that level, they will want to mitigate their losses. They'll want to get out and cut their ties, right? So that is why it's called a mitigation block. The reverse is true with bullish, right? So sellers when short will need to mitigate their losses when price retraces to this level. It's the same concept, and we'll break it through in charts very shortly. We are looking to take an entry off the mitigation block for continuation in the direction of the break of market structure. And again, we will go through this in more detail in the charts, right? And the way that they differ from a breaker block is that breaker blocks usually have, or they do have, a purge of either the buy side or sell side before showing signs of continuation, whereas mitigation blocks do not have that. So that's the clearest identification difference between a mitigation block and a breaker block, right? So let's just go through some examples here on these study charts, and then we'll go into the real charts, right? So this is an anticipated level of resistance. So this can be a PD array on a higher time frame. Now, if you don't know, guys, know what the PD array matrix is, I'll just bring it across. So it can be either one of these on a higher time frame, right? So price can be running into this, and it's acting as a form of resistance. Now, in order to know what is a level of resistance, you're going to want to know where you sit in the higher time frame and whether you're in a premium or discount, but they are for other videos. This is purely for understanding what a mitigation block is. And so if you are able to frame what a higher time frame resistance level is, then we can start to break down what the mitigation block is likely to look like, right? So we'll get a price drive into that anticipated level of resistance and then a fall away from it, right? And then on the next leg up, it will fail to take those highs. It will fail to break that resistance level, right? And so price will crash through. It's at this point where people who went long here are going to want to mitigate their losses when price retraces back up into this mitigation block. And the mitigation block is the lowest down close candle within this section of price action here. And again, we will show this in charts very, very shortly. And then you're taking your entry off the mitigation block. So when price returns into that lowest candle, that is your entry to go short. Okay, so that is a bearish mitigation block. Price drives up into the anticipated level of resistance, it falls back, you then get a failure swing high, it crashes through this swing low, which is a market structure shift. It then retraces back up into the lowest down close candle, and that's where you frame your entry short, right? That is a mitigation block on the bearish side. Okay, so a bullish mitigation block is obviously the reverse of that, right? So We have a period of support, so a higher time frame level of support, right? And price drives into this and bounces off it, right? Price then comes back down, retests it, but doesn't break through it, right? And aggressively moves away, right? We're then looking at the highest up close candle in this swing high in between two swing lows for price to return into, for us to take our entry off the highest up close candle to see price move upwards. So again, we're just looking at anticipated level of support on a higher time frame. And so if price moves away, comes back, forms this lower swing low, higher swing low, and moves higher and returns back into this highest up close candle, that is your mitigation block to move higher. Okay. So let's have a look at it in still charts for a second, and then we'll go into live charts and we will see them in action, right? So this is a mitigation block on a 1 hour chart, okay? And I just want to show you how long it can take for price to come back up to that mitigation block for price to fall away from, right? So it's a really interesting point to notice. It doesn't have to happen immediately. This is over a long period of time. This is almost a week. Price has gone away and come back. And so we have the low, the high into resistance, right? The low, fail, swing high. So it doesn't break through this high, okay? Low, high, doesn't break through this high on the retest, right? And breaks away. We are looking for price to come back and tackle what? The lowest down close candle in between the two swing highs, right? So, which would be this red candle right here on the hourly, right? So price runs up to it, that is your entry to go short, right? Simple, right? And the next takeaway is to know that price is fractal. So if we can get a mitigation block inside a mitigation block, guess what? We've just narrowed down our entry even better. So I've just shown you this is exactly the same piece of price action, albeit we're now on the 15-minute chart. Previously it was the hourly, this is the 15-minute. It's the same price action, right? And time is fractal. So what do we get here? We get a mitigation block. So we have the low, the high into resistance, the low in between two swing highs, failure swing high on the second one, so it doesn't break the resistance, it doesn't break this swing high, and fails, right? And then 4 or 5 days later, it comes back, retests the lowest down close candle in between those two swing highs, right? Simple. And that's your entry, and you go short. There we go. And so that is 101 of mitigation blocks in a fixed form, right? So let's have a look at them in charts just so you guys can get a better read on them. So this was actually the other day, and this is actually a trade I took, right? So I took this trade for 20 handles, and if you don't believe me, jump into my Discord or head over to my Twitter, and you can see the trade that I took, right? And this was it. This was it, and it was a mitigation block. So we had this early session from 10 o'clock, and this is an hourly chart, run down, right? And then price immediately went high. But what have we got here? We've got a what? We've got a failure swing high. So it didn't get through that higher form resistance, that higher level resistance level. And on this instance, it was this 1 hour fair value gap that was in equilibrium of a displacement range, right? So equilibrium of this range, right? In a market that was heavy, exceedingly heavy, because Dixie was volatile and moving higher, right? And when Dixie goes up, ES goes down, okay? So it was showing immense weakness. And so this was the higher time frame level of resistance, this fair value gap within inside this displacement rate. And so price moves lower, tries to get back up there to retest it, can't do it, heads away. So what are we then looking for? The lowest down close candle, right, is your mitigation block. This is the mitigation block, right? This is your mitigation block. And so price returns up into it, and I actually took this short here. So as soon as it hit it, and it's actually, so as soon as it hit it, I took this short, right? Literally this candle. I got in at 75, I think my fill was. So you can check my Twitter, it's over there. And I wrote it down for 20 handles. I took it down to 39.50, which is obviously a whole site number. So whole site number. But you can see it, for the purpose of the mitigation block, you can quite clearly see it, right? The high, the low, the failed swing high, the breakthrough, lowest down closed candle, boom. But the key piece of information is this is a higher time frame period of resistance. Okay, so that is what helps frame it to be a solid mitigation block to trade. Right? So let's look at a lower time frame on the bullish side, right? So on this side, we had price return back to 39.50, which is a whole site number, so quote unquote is going to be seen as support. You know, whole site numbers 3900, 3950, 40, 400, 4000, 4100, 4200, etc. They are all, it's not an ICT concept specifically, but it is well known that they are support and resistance, whole site numbers, right? And so we also had this confluence that we had this bullish order block, right? So if you don't know what order blocks are, I've also done a video on order blocks, and you guys are more than welcome to watch that. I'll put a comment in the top right hand corner, and also link it at the end so you guys can watch that. But price comes down and hits this order block, which is the terminus point of this candle for the day, right? And so this happens at lunch, right? Right down this level comes at lunch, and so that is our support support level on a higher time frame. And so now we can look for a stroke setup on a mitigation block if it forms, because we know we're coming off a lower time frame high resistance. Support, a high support level, right? So we get it here. We get the low, we get the high, we get the failed swing low. It doesn't want to punch through, right? Price then moves away aggressively and comes back and tests what? The highest up close candle in between the two swing lows, right? That is our mitigation block. Price comes down and literally fills it to a tick. And look at the price action we had, the aggressive move off we had from that. So if you can understand and frame that, you know, this is a higher time frame support level that I've just mentioned previously, then you can start looking for these mitigation blocks, because you've got added confidence that this is a level which is unlikely to be broken. Okay? And so I just want to go back to the first point, which was understanding why mitigation blocks are so important, especially around higher time frame levels of support and resistance. And it's to do with this. And this is a little bit of secret sauce added. It's like a bonus to this mitigation block series, right? And it's this. So this is the PD array matrix, right? And so if you are in equilibrium of a displacement leg, so you are in equilibrium of a range, whether that's a dealing range or a displacement leg, whatever that may be, equilibrium of a range, right? If price is to move into a premium range, so to move into a premium of that displacement leg or dealing range, or is to move into a discount of that dealing range or displacement leg, then it has to go through this order in order to get to the swing high or swing low of that dealing range. So imagine this up here is the swing high of the dealing range, and this is the swing low of the dealing range, and you are bang slap in the middle of that dealing range. You are likely to come across first a mitigation block. A mitigation block is first, and then you go to breaker, liquidity, or fair value gap, bearish order block, reject block, and then you get to the old high, right? And so this is, I talk about this a lot in my Discord, but I'm not going to go through it in today's session. But the most important point is a mitigation block. So this is a super safe entry to go long or short depending in your bias of direction, because mitigation blocks are the first thing that price has got to break through in order to run into its premium or discount array. Does that make sense? So if we just look at this price action, we've got a mitigation block, right? And this is a prime example of it. So we've got this mitigation block that we have here, right? So if we are believing price is going to run into a premium, so we believe that price is going to move higher, what does it have to break through, or what is its quote-unquote support? It's the mitigation block, right? Because if it goes through the mitigation block, it's got to go to a breaker, then a liquidity void, fair value gap, and then a rejection block all the way down to the old low, which would be down here, right? Sorry, be way down here, right? But if price is to move higher, this mitigation block becomes the level of support. So price then has to move back up through this level of the PD array matrix in order to get to the high. So we can see that this is the high time frame level of support, right? This is the high time frame level of support. So price has moved away and created what? A mitigation block. Price aggressively moves away, and it comes back. if you're thinking that price is going to run deeper into a further deeper discount, it's got to break this MIT block. So if your overall bias is still bullish, this is a super safe entry on a retest, because it's the lowest place price can run to before running into a discount array. The mitigation block is that line in the sand, as I like to call it. So you can see price came all the way back to that mitigation block and it couldn't break it, and it ran away, okay, and it filled back in this void of liquidity here, okay, which is going back through this PD matrix, right? So I hope you found that useful, and I hope you enjoyed that, a little bonus there at the end. But that's going to be it for today. That is everything you need to know about mitigation blocks, right? So I hope you find it useful, and if you have any questions, feel free to jump over to our Discord or hit me up on Twitter, and I'm more than happy to help you out, or of course drop some comments in the description below. Anyway, until as always, trade safe, take care, and I'll see you on the other side. Bye now.